Hey guys, this is Miss Venturous AKA the Blockchain Babe. Today we're going to be going over the basics of blockchain technology. I'm talking just some 101 basic stuff. So, assuming that you've already heard of Bitcoin, the dominant top dog of the cryptocurrency market, you may or may not know that Bitcoin was built and runs off of what is called the blockchain. I think that in order to have conversations about cryptocurrency, you need to have a little bit of a background on what cryptocurrency is even built off of and the societal implications of the blockchain technology. So first off, blockchain is not Bitcoin, and Bitcoin is not blockchain. This is something that I hear a lot, and I know it can get a little bit confusing, but again, like we said in the very beginning here, Bitcoin was just the first thing to be built on top of the blockchain. So the blockchain technology is kind of a beast of itself, right? It's kind of its own thing. Bitcoin is just built on top of it. And after Bitcoin was built on top of it in 2009 by some anonymous people, then kind of slipped, tripped, and fell into all the other different cryptocurrencies we have today. So, before we can really get into what blockchain really is or even how cryptocurrency relates to it, let's go over what money really even is and how we manage it. So, instead of bartering for goods, like my 4 goats are worth your 1 daughter or whatever, designed a way to exchange value by adding value to the dollar, right? So the dollar is simply a government-created paper note that showed how much gold it represented. And banks, we use their money, right? Ultimately, this is key here, guys. Ultimately, the bills are worthless. They're just an idea backed by confidence, right? This idea that bills are simply backed by confidence is one way of describing how we value currency, right? So the dollar is simply a government-created paper note that showed how much gold it represented. For example, and I'm not saying that this is actually the case or whoever was, but $1 equals, less gold shares, $100 equals more gold shares, just as an example. So I read this by Danny Amsalem. Shout out to Danny, props. I don't really know who you are, but I found this quote by you and I stole it because I liked it. So to speak the words of Danny here, for approximately 4,000 years and across the globe, people used shells known as cowries as currency. They were beautiful, unique, and could not be manufactured. Later, almost 2,000 years ago, in and around Egypt, wheat was used as currency. Wheat, being a common and important part of our diet, was valuable, portable, and exchangeable. Today, governments authorize their bills as legit because we have faith in our governments and banks. We use their money. Ultimately, this is key here, guys. Ultimately, the bills are worthless. They're just an idea backed by confidence. Let me say that again. Ultimately, the worthless bills are just an idea backed by confidence. This idea that bills are simply backed by confidence is one way of describing how we value currency. Since the US dollar hasn't been backed by gold since 1973, we simply exchange the dollar as a placeholder, right? Just to put value behind this paper so that we can exchange goods and continue our lives as normal. So besides the currency itself, there is a system in place. You know them as banks. These banks track who has money, who doesn't, who gives money to who, and who receives it, right? Now, it has been said that blockchain will do for transactions what the internet did for information, right? Now, Jeannie Romedy said what the internet did for communications, the blockchain will do for trusted transactions. The reason why people are making these bold claims about blockchain being kind of the, not necessarily Internet 2.0, but a way to have shared and secure, trusted transaction history between people is because blockchain in and of itself is shared, decentralized, and secure. So the blockchain is basically a ledger, right, that is distributed to everyone, kind of like a shared Excel spreadsheet. Right? The information is shared and viewable to all that want to look at it. Now, the ledger can only be changed when it is voted for amongst the group. This makes it more democratic, more secure, and kind of peer-reviewed, if you will. It means there's no need for a central authority or middleman, more importantly, to approve transactions like the World Bank Organization does, or Chase or Wells Fargo, or whoever you want, right? This ledger facilitates record keeping for transactions, and it also tracks assets. So when I say assets, right, if we're tracking assets here, assets commonly, right, currency. Currency is an asset. That's a liquid asset. Now, an asset can be material, whether it be a house, real estate, a car, or something else. But an asset can also be immaterial, right? It can be something like an idea, a brand, a logo. When you wish to trade something within the blockchain network, it's tracked and viewable to anyone who wishes to see it. So this means pretty much all assets, whether they be material or immaterial, can be tracked within the blockchain. So most traditional currencies use banks to facilitate these transactions and keep the histories and ledgers to fight against credit card fraud and to exchange money between different people, right? Now, in 2009, Bitcoin came out, right? Nobody really knew about it at the time. People were like, what is this thing? And then we had like the deep web, with Onion browser, and people were like hiring assassins and paying for them in cryptocurrency and like getting fake passports or whatever, and so the government was cracking down on the deep web. But when cryptocurrency emerged through blockchain and through Bitcoin, no one really knew what it was or who really made it. It was and is still a digital currency that was created by someone or someone's multiple under the alias Satoshi Nakamoto. Now, in 2009, Bitcoin came out, right? Nobody really knew about it at the time. People were like, what is this thing? And then we had like the deep web, with Onion browser, and people were like hiring assassins and paying for them in cryptocurrency and like getting fake passports or whatever. And so the government was cracking down on the deep web. But when cryptocurrency emerged through blockchain and through Bitcoin, no one really knew what it was or who really made it. It was and is still a digital currency that was created by someone or someone's multiple under the alias Satoshi Nakamoto. It was built on the blockchain system, again, which is a transaction history ledger, if you will, and it was the first thing or application to be built on the system. So, number one, why blockchain is cool. Simply put, why it's cool, why I like it, why I'm into it. I tend to be a little bit more of an anarchist, a little bit more of an advocate for transparency, and that's something that blockchain provides to me and to society as a whole in my eyes, right? So since you have these peer-reviewed nodes, right, that are decentralized, instead of having one central internet point, right, like OpenSSL, where the internet then stems outward, for lack of a better analogy, you have all these different little nodes within the system. Now, each of these nodes are represented by a computer. My computer is a node because I have something called the interplanetary file system downloaded onto it, and so I'm able to use my laptop as a node. We'll get into that later though, okay? But the main thing is blockchain. Now, each of these nodes are represented by a computer. My computer is a node because I have something called the interplanetary file system downloaded onto it, and so I'm able to use my laptop as a node. We'll get into that later though, okay? But the main thing is blockchain has greater transparency and reduces infrastructure costs for big banks. So to summarize and simplify, the blockchain geeks have summed it up really nicely with an infographic, which if you go on to steemit.com and you follow me at Miss Venturous and go look at my step-by-step blockchain breakdown for beginners, I put that infographic in there. So at Miss Venturous, all together, go check it out. But I'll kind of just walk you through it. I'll look at the infographic if you want to pull it up, and I'll kind of go through each step here. So a step-by-step blockchain breakdown of kind of how it evolves, how each transaction evolves. So step 1, someone requests a transaction. So when someone requests a transaction, it's either to purchase something or to exchange stocks between cryptocurrencies. It's kind of like, maybe me visiting the ATM or buying something on eBay, what have you. It's just I'm requesting a transaction, whether to buy or sell something. And that could be, again, material assets or immaterial assets, right? So step number 2, the requested transaction is then broadcasted out to a person-to-person network made up of computers known as nodes. Remember how we talked earlier about all the different decentralized nodes within the system? That's where this comes into play. This means that anyone can be a node. The people who verify transactions that are broadcasted to the person-to-person network, people who are monitoring those and verifying those people are called miners. Now this, we'll talk about it on a later episode, but you can actually make a profit from doing this. Some people are making more money than others, and it's kind of a subjective hobbyist thing right now, but some people are getting way into it and they've made it an occupation. So we'll talk about it later. So basically, to be a node, this means that anyone can be it, and the people who verify, these verifiers are called miners, just to summarize. All right. The third most important step is this validation step, right? The validation comes from the network of nodes, and they validate the user status using known algorithms. This validation is a key component that expands the democratic, transparent, and decentralized system that we know as a blockchain, right? In the centralized version of the internet, right, OpenSSL, we have one thing stemming out, right? If the main node or server set were to fall or be comprised, like it has been in the past multiple times, the whole system goes down or gets hacked, money gets stolen, not accounted for. Oh, we're out 17 million because someone hacked into the mainframe, right? Not good. Not good. Not very transparent, not very open or democratic. Now, the more users that we have, these miners, to verify the transactions that are being broadcasted to this person-to-person network, the stronger that the blockchain system becomes, right? A verified transaction can involve cryptocurrency, contracts, records, or other information, right? We talked about this earlier, material versus immaterial assets. This is where cryptocurrency comes in to the blockchain play, right? So you have that request for a transaction, you have people verifying that you requested a transaction, and now cryptocurrency comes in. Cryptocurrency doesn't have any intrinsic value, right? It's not redeemable for any other commodity such as gold, right? It's kind of like its own stock market. Cryptocurrency market is like a stock market 2.0, right? It has no physical form and it exists only within the network. The supply is not determined by a central bank like the World Bank Organization or other dollars weighing their value against the US dollar. The network is completely decentralized from anything else, right? The new block is then added to the blockchain, if you will. So every time a transaction is put into the system, every time information is added to the system, imagine it as if it was a little Lego, right? A block. And then there's a chain, and then there's another block. And then there's a chain, and then there's another block, right? So this is kind of where I guess the blockchain name came from, but I'm not sure. but I think it's a good way to explain it. Every action, though, that is logged within the network is noted by these nodes, right? We talked about this, the computers that verify the transactions and actions within the network. When it's verified, that block is locked in within the blockchain and it's unalterable and transparent for the whole of the network. So as soon as something's logged, it never goes away and anybody can see it, right? That's really the core fundamental of blockchain that makes it so democratic and transparent. Because once that action is taken, everyone can see it and it doesn't go away. Now this is the last step. Transaction's complete, right? Cryptocurrency came in, we had a transaction, it's within the blockchain, everyone can see it, and that's pretty much it. I mean, that's a really good way, I think, to kind of just break down easily what blockchain means, because you can get way more into it, right? Like you can get crazy down the rabbit hole, and there's all these ICO projects, and you can be a part of, the new internet that's being created, new social media platforms that are coming into play that are all decentralized. My favorite one being Steemit. I think that Steemit is a great way for people to teach themselves more about the blockchain and also get into new ICO projects, which are basically things like DSound, DLive, DTube, Steepshot. These are all new social media alternatives. Not necessarily alternatives. I use them both. So I post to YouTube and then I also post to DTube. But the difference between the blockchain network, DTube, and the existing internet network, YouTube, is that DTube is not censored and doesn't have any advertisements. Above and beyond that, a lot of these blockchain networks, actually, when you get upvoted and people like your stuff, you get paid. So stay tuned for another episode about how to make money with Steemit and other platforms like it, and ditch your Instagram, ditch your YouTube if it's not making you any money. So the reason why you make money within these kinds of networks is because everything that you do within the network, like posting, commenting, liking other stuff, it's all logged, right? Remember those blocks with the chains in between, blockchain? Every time you like something, or you comment, or you move within the network, it's transparent, everyone can see it, and it's locked within the system. So anyway, that's about it. Stay tuned for part 2 of more in-depth blockchain analysis. I'm Miss Venturous, AKA the Blockchain Babe, and we'll be back at a later date with more cool info.